indeed.
Imagine a server farm whirring in Nairobi, powered by Indian engineers who just opened a secret GPU vault. And the next thing you know, mobile money transactions are soaring across Lagos, Cape Town, and Accra, all tied back to Silicon Valley-style ambition born in Bangalore. But this isn't a sci-fi movie, it's 2025, and Indian IT giants are quietly rewriting the global playbook in Africa. What sparked this late-night scramble across 2 continents? And how does one handshake or data center become the backbone of an emerging supercontinent? We're about to dive into that story. But first, let's uncover the first spark behind this surge. India was staring down hefty US tariffs, 25% slapped on many goods, and needed a strategic diversion. By shifting exports to fast-growing African markets, companies found a way to keep products flowing and profits rising. Bilateral trade is on track to hit $100 billion in 2024-25, as India leans into pharmaceuticals, energy, and manufactured goods. Pharma firms like Sun Pharma and Cipla are shipping affordable generics across the continent. Energy giants like Adani are forging infrastructure ties beyond just oil. Agriculture too is booming. Indian companies are putting billions into African farmland, Ethiopia, Kenya, Madagascar, to grow everything from roses to rice. These weren't feel-good gestures, they were hard strategic moves, hedging against geopolitical risks, currency swings, and trade wars. By the time we look closer, you'll see sectors more surprising than DARPA-level AI deals. India is scrambling for energy security. With imports from Russia dipping, it doubled African oil imports in just a month, from 143,000 barrels per day in January to 330,000 in February 2025. IOC is securing oil from Nigeria and Angola. Meanwhile, ONGC, by PCL, and Oil India combined are funding Mozambique's gas fields with a $175 million loan targeting massive reserves. But energy isn't the only prize. Inside Zambia, India grabbed 9,000 square kilometers of copper-rich land, more than 3 times the size of Delhi. That copper is vital for renewable energy and EV manufacturing. As India aims for 500 GW of clean energy by 2030, copper demand is skyrocketing. On top of that, NMD, India's state miner, is eyeing lithium, cobalt, iron ore across Africa. They opened a Dubai office in mid-2025 to strategize acquisitions and due diligence. This push into resources isn't just about digging stuff up, it's geopolitics, industrial security, and a race for technologies that won't wait. Think of a continent where untapped telecom potential is being tapped hard. Bharti Airtel is already one of Africa's largest mobile providers, with $5 billion in revenue by 2024 and services across 14 countries. Now, Indus Towers, Airtel's infrastructure wing, is expanding into Nigeria, Uganda, Zambia, even using Airtel Africa as its anchor. That bold move rattled investors. Indus shares dropped around 5%, hitting a 52-week low. But even so, the expansion signals a long-term vision: telecom towers, antennas, broadband that India is building deep. Meanwhile, digital services are evolving. Airtel's tech arm, Telefy, just launched an Airtel Cloud and AI platform tailored for telcos. It already has partnerships with Singtel, Globe, and Airtel Africa. Talk about India bringing the back-end brains as well as the hardware. Digital Africa is being built by Indian tech, not from overseas charity, but from exports, infrastructure, and evolving networks. And there's more on the horizon. When you think tech diplomacy, India isn't sending battleships, it's sending bytes. Take the Pan-African E-Network project, a satellite and fiber optic network connecting 55 African states with Indian universities and hospitals for tele-education, telemedicine, governance, and more. Started in 2009 with a $125 million grant, it's Africa's largest ICT project and a model of South-South cooperation. Skills exchange is real, too. Indian pharma companies train African regulators and doctors. Kenyan and Ethiopian officials study Indian labs. These partnerships linger, build trust, and open pathways for business expansions. Contrast this with infrastructure loans. India is handing over skills and solutions, not debt, that creates local goodwill and a vested interest in the success of Indian firms. There's more in play than business. Let's see how India is structuring these investments for resilience. These aren't ad hoc projects, they're structured to endure. India's investments grow about 18% annually in Africa since early 2000s. Unlike mega Chinese loans, Indian deals often involve skill sharing, local acquisition, private partnerships, and political alignment. Take pharma, telecom, energy, agriculture. India enters via acquisition or GV with African partners, avoids outright high debt traps, builds trust. On the finance side, banks are financing local processing plants so Africa captures more of the value chain, while shared risk stays low. Meanwhile, India's mining giants are building exploration units in Dubai to scout critical resources, working methodically, legitimizing, scaling. These are longevity plays, tech ecosystems, infrastructure ownership, value-added processing, not just raw extraction. Hold tight. Next we'll see how critics and competition are pressing back. Open loop to body section 6. What could shake this, but also why it may be unstoppable. It's not all smooth sailing. Adani's attempt to capture Kenya's airport and power infrastructure collapsed amid bribery allegations, legal backlash, and cancelled deals demonstrating the political risk and the limits of opacity. Competition is intense. China's BRI still dwarfs India in scale and structural loans, but India trades in relationship, resilience, labor, and local integration. Still, African instability, inconsistent regulations, logistics hurdles remain. Power outages in mining zones can slow copper production. Export taxes can shift project economics overnight, yet Indian firms often outlast. They enter gradually, adapt, and win where others overpromise and underdeliver. By the end, you'll recognize the silent strength of this approach. Open loop to conclusion, ready for the big picture finish. India's 2025 Africa push isn't a headline grab, it's a draw narrow. From trade hedging to energy deals, copper extraction, digital infrastructure, soft power, and disciplined structures, this is a multi-pronged strategy designed for endurance. Exports to Africa dodge tariffs, energy deals secure fuel, copper mines feed green manufacturing, data towers and cloud services build digital resilience, soft networks create trust, structured investments ensure longevity. Even setbacks like the Adani fiasco spotlight maturity and the need for transparency. This is less about flash, more about foundation. India is stitching itself into Africa's growth story not through force, but through flow. The result? A partnership that's economic, political, and generational. So next time you swipe Airtel on your phone, think of circuits powered by copper in Zambia, underpinned by deals struck in Delhi, stitched together by a quiet vision that extends across oceans. That's 2025 India-Africa, not headline chaos, but chapter 1 of something much bigger. But critics point out another challenge: digital sovereignty. African leaders are increasingly cautious about who builds and controls their telecom grids and data centers. While Indian firms often emphasize partnership, the fear is that sensitive data could flow out of Africa without strong oversight. Countries like Nigeria and South Africa are drafting laws that require local storage of critical data, forcing Indian companies to adapt their strategies rather than simply plug in ready-made systems. Another hurdle is financing. Unlike China, which pours in state-backed mega loans, Indian ventures lean heavily on private investors and development banks. That makes them less risky for host nations, but also slower to scale. A copper mine in Zambia or a tower rollout in Uganda might need years to fully mature, leaving open the chance that political winds shift in the meantime. And then there's rivalry not just with China, but with rising Gulf investors. The UAE and Saudi Arabia are aggressively buying stakes in African ports, telecom firms, and mineral rights. For India, this means more competition for the very contracts that seemed secure only a year ago. Yet, here lies the paradox. Africa's growth curve is so steep that even with rivalries and risks, the market is simply too vast to ignore. Indian firms know that if they can weather these challenges, the rewards won't just be profits, they'll be influence, trust, and a long-term stake in shaping the future of a continent.